Market Math. What's up, everyone?
Hey there, guys. Jackie C here.
Shady V. Market Math.
We're back at it again. How are you boys doing today?
Pretty good.
Doing good. My stocks are up thanks to this guy.
Yeah.
So-
Same, yeah.
We're hoping you have more advice for us today.
I
Good
do.
day today, right?
Very good day today,
I
yeah.
ended green and everything, so I don't know
Yeah,
if you want
me
to talk
too.
about it.
Yeah, I can talk a little bit. Yeah, it was a really green day today. Just one thing to know is that since it was really green today, we could expect some, down days this week. I mean, usually with a large, uptrend, there's going to be a little bit of retracement. Some things may go red, this week. It's going to maybe some good buying opportunities. But yeah, you wanted to talk about potentially diversifying portfolios. Is that what you were saying? Or
Yeah, we can talk about that. A lot of people talk about the importance of a diverse portfolio. I guess it protects you from losses. To some extent, it probably hinders you from gains, right? Because
little bit.
everything is so diverse, it minimizes the percentages. But what would you say the importance of diversity is?
Well,
In the market, I mean, like
diversifying. So, like you said, less money to be made. So potentially, less risk, less reward. But that means, if we have another correction or, if anything crazy happens, you're going to lose less money potentially. I remember that you mentioned to me something about, what if you had $10,000? I actually had an interview with the CFP because I'm trying to start my internship and finish my education, and that's one of the questions they asked. They said, well, if you had $10,000, first of all, what would you do with it, and why? And me having a little bit of experience in this field, I tried to say the correct thing, but I mean, what would you guys do? I don't know. But for me, what I would do is I first take that $10,000. I'd allocate most of it, into my Roth IRA. You have your yearly contributions, which are $6,000 a year now. So say take $6,000 of the 10,000, put it in your Roth. Well, what are you going to put it in? And that's where diversification comes into play. Instead of putting everything into multiple different companies, individual stocks, being diversified, what if half those companies go bankrupt or, correction, they tank in price, it's not going to be good for you. So diversifying is something that is going to protect you from losing a lot of money. One thing that you could do is look up the best ETFs, best mutual funds that are out there. You can go on Morningstar.com. They have different ratings that you could look up to see. And when you look at those different funds, you can see all the different holdings in those specific funds. So buying mutual funds and buying ETFs are a good option. You get to own a little bit of a lot of the big companies in that one mutual fund or ETF. So being diversified in that aspect is really good. So that means if one ETF, for example, I really like the ARK Innovation. They have multiple different ones. Say the ARK K fund has a bunch of Tesla and Tesla tanks. Instead of owning all the shares of Tesla and losing a lot of money, you're only going to have a little bit of maybe downside in that ETF as opposed to owning the individual stock. One other quick thing to mention is going to be the commodities, like the different precious metals. Like gold, silver is a really good thing to have in there to kind of balance out if there ever is like a correction. Dollar is looking pretty weak right now with all the inflation we've had, all the money pumped into the economy from all the stimulus. I know that they're talking about raising interest rates again. We'll have to see how the market reacts to that. So having different things like that in your portfolio is definitely going to help if anything's announced and the market takes it negatively. Definitely some bonds as well, although right now wouldn't be a good time to buy those, but just keep in mind, having those as well is a good way to diversify your portfolio. And then a lot of people are talking about now crypto. We should start maybe thinking about looking into that. I've always been very skeptical about it. I'm honestly, don't know too much about it, but I'm trying to learn more and get into it now. But definitely something to do your research on and maybe try to put a little bit in there as well, so that if anything else in the regular stock market happens, maybe that the crypto will kind of bounce out a little bit as well. But yeah, that's one way to be diversified. Yeah.
Wow, that was definitely a lot to digest.
Yeah.
Shay, do you have any questions?
Tons.
All right, go ahead.
But
I'm
no,
sorry if I'm not explaining
no.
right now. I'm very tired.
No, you're fine.
Yeah, that was just. They're definitely gonna have to rewind that one back. I definitely will have to rewatch this episode
for sure.
I had
But
a long week with finals, so
but no, it was actually it was a lot of great information. I think it's a lot of information.
Yeah.
And so I guess my question would be based on your question. Let's say you had $10,000. What would the different courses of action, generally speaking, be, do you think, for our modern market? Like what would most people do, and what would be the difference between what you should do, I suppose, would be my
well, I feel like most people don't invest. A lot of people aren't aware, aren't very educated on it. So, did you want to say something? Or
Yeah, I think I get Shane's question.
okay,
He's saying, "What's the common mistake most people would make with their
Oh,
money
That's a better way to word it.
if they were to
that was
Yeah, I
that
was gonna
was
say, okay,
thank you.
no,
Yeah, I
hear
couldn't
you,
articulate
I
that.
was like,
Yeah.
okay, I think he's saying like, what is the mistake most people are gonna make? Like,
I think not doing your due diligence or research on different whether you do individual stocks or ETFs, not doing your research. If you just pick something and put it in there without knowing really what's behind the scenes or what's going to be happening with that specific company, you're not doing the right thing. You got to do your research. There's definitely different ways to do your research and different indicators to see where a specific price of a certain either stock, fund, whatever is going to go. Technical analysis, fundamental analysis. I'm not really going to go into detail about that right now, but something that I look for, I use both. I look at the short term and the long term for technical, and then I look at the fundamental analysis too. What future events or what things within the company are going to drive the price up and increase revenue. So maybe if you're doing research on a company, try to find something that has a big, long-term growth potential. For example, a lot of the things I've been talking about lately are going to be the clean energy. That's our future. Long term,
happy Earth Day.
Exactly.
Yeah.
Happy Earth Day. So, just doing your research. I think a lot of people throw money into like Bitcoin and like crypto and other and like Tesla and other companies like on Robinhood or whatever kind of brokerage you're doing, and not really know what's behind the scenes with all what's going on within the company, what the future holds for those companies. It's just kind of like going off of like self-guidance, but without doing the research, I guess. I don't know.
That makes a lot of sense.
Yeah.
I think to summarize what you're saying is
Summarizing
here. Don't chase. Don't just follow the popular trends.
Don't follow the hype. Yeah.
That's how you'll get burned.
Be patient. I'm probably gonna butcher the quote, but I think Warren Buffett had
we got a question here. Do you think personal finance advisor is worth the money?
It is if you have a certain threshold that you're like if you're working with a 401k and retirement money and you have a lot of assets, I would definitely say yes. But if you're just getting into it right now and you're kind of starting out and don't have a lot of money, I would say it may not be worth it, because some advisors take up to, I think, 3 or 4% a year of your money, whether the market tanks or not. So it just kind of depends how much money you're working with. I would say that if you're settled in a job and you have a good amount of retirement in your 401k and you have a good amount of money in the bank and you're looking to put it somewhere else, then yeah, it's probably worth it to talk to someone about it. And, but also doing research on your own as well is always going to be helpful. So
great question, Lauren. Thank you.
Thanks, Lauren.
Yeah, that's my future goal, is to be a CFP. So I'm hoping to help people in the future, manage their retirement.
So you may be biased
in
saying that financial planner, worth it.
Yeah. I'll have to give my business card out to these guys once I finish up.
And we'll happily take it.
Yeah. But yeah, you were saying like the hype, like don't chase. Like I think there's a lot of stigma right now with younger people getting into the market and kind of just being like, I'm gonna throw money in Apple, I'm gonna throw money in this and that, and that's those companies are very established and they probably won't go down very much if they do at all. They will probably continue to go up, but that's not really the way to do it. You got to do your research. And also, like I know a lot of people that I follow online as well strictly use you know technical analysis and what's happening at that moment based on the charts and the price action and different indicators. And I do look at that as well, but I really think that you also have to incorporate some fundamental analysis as well. So I really like, I'm really into like biotech and like pharmaceutical companies, and a lot of those companies are really their prices inflated just on hype of having a future product. They may have zero revenue until that product gets approved. That's all on hype. A lot of it is based off of future sales of that specific drug. They have estimates and guidance on that based on how much they can sell of it. So just as one example, I guess. But yeah.
Good stuff.
Yeah. Would you like me to answer anything else, or?
Yeah. You know how we like to end it. If you could give us your the 5 plays you're looking at.
I don't know if I have five,
fantastic
but
5.
yeah.
Well, your terrific 3, terrific 2.
I think I have a couple. Let me see.
1.
And I may reiterate ones I've mentioned before. And I just want to say, like, obviously, when I mention these ones, I'm going to give you like what I would do with it. I'm not going to just say it and then leave you hanging or whatever. But anyways, let's see. So one that I've been following a long time is TDAC. The ticker symbol is TDAC. It's a SPAC, which we've mentioned before. It's like kind of the shell company before it goes public and becomes the actual company that's going to be underwritten by it. But anyways, they're merging with lottery.com. So what they're going to do is they're going to pretty much dominate the lottery business, not only in the US, but multiple other countries. I think they're going to release revenue guidance on that pretty soon. But what that means is that they're going to bring, lottery tickets to all mobile devices, like pretty much worldwide. They're going to have like 90% of that market. So that's a huge industry. That's a $1 billion a year industry or more. I mean, multi-billion-dollar probably. So right now they're trading at $12.70. I got in around $11.30, and with most SPACs they don't go below $10. There is a lot of hype with those as well, and sometimes when they do go public, they sometimes tank. So my advice would be is if you're going to get in, try to get in at a price that's under 13 or so, and kind of just hold it and watch the price action. If it gets to a certain point, that you feel comfortable selling, I would sell. I'm kind of holding until the merger to see where the price is. I think they're expecting the merger in a couple months, so keep an eye out for that one. I think that we could hit $20 before the merger. So if you ride it up from like 13 or lower to 20, that's a pretty good gain right there. So that's one of them. And also a pretty safe play. Like I said, the floor is about $10 with that one. What else? Let's see here. I'm going to mention Sesson again today, guys, because I really like Sesson a lot.
Okay.
They had a great day today. I like Sesson. They were up about almost 11% today.
Wow.
Yeah.
Can't be mad at that.
I'm a long-term investor in their company. I'm not swing trading this one. I believe in the company. I briefly said before, they have a drug for bladder cancer. It's going to replace Keytruda, which is owned by Merck & Co., which is the billion-dollar pharmaceutical company. And pretty much with that one is they're going to be the standard of care for this. There's a pretty good chance of approval. Like I say, with all the plays and stuff, there's always risk involved. It could somehow, obviously not get approved. But the rate of approval right now is looking about, I think, above 80%. So if it gets approved, they have to start marketing the product and get the sales in. But I think that the peak sales is over $3 billion. So right now the market cap's at $400 million. That's a pretty good gain right there. I mean, we could see a buyout with them as well. This is a long-term hold. I don't doubt that it will go over $20 a share in the next 2 years as long as this gets approved this summer. So that's an amazing gain. I bought in. I'm not gonna lie. I bought in around $1.10. I'm holding a good amount. I'm up over 140% right now, and I'm not selling until it goes over $15-20. So
And
I have a lot of faith.
okay, that's what I was going to ask. You said if the drug gets approved.
So I'll give you
What
another.
would you say the odds of that are?
So the odds. So usually when I'll briefly talk about the FDA process. There's a phase 1, a phase 2, and a phase 3 trial, right? So in order to get to phase 3, you have to pass phase 1 and 2. They have to show certain percentages of their drugs that are effective, right? So once you get to phase 3 approval, to show that to the AdCom or committee board for the FDA, usually it's like a board of 12 to 15 members that sit. The doctors come in and the company comes in and they explain their case to the FDA and reasons why it should be approved. If they vote, the vote is, majority yes, then it goes forward usually to the next process, which would be the FDA date and the NDA submission and all that. So usually when something passes the phase 3 trial, the statistical process to get it passed by the FDA is usually about 86%, I think is what the exact percentage is of the 80s. However, the next stock I was going to mention is Heron, which I don't know if I mentioned them on here before, another pharmaceutical company. And the reason I'm mentioning these this week is because they have the FDA dates coming up pretty soon.
Okay.
Yeah. So this one's going to be May. Heron closed at 18.09 today, up almost 5%. I'm holding a good amount of that at about $17, but I've been in this stock for almost 2 years. So this is a good example of something that failed. So it failed the first 2 attempts. This is the third attempt it's going for the FDA. They were very minor reasons for it being failed. One was like labeling, I think a little bit of manufacturing. As long as the FDA doesn't say that we need more, phase trials or anything like that, usually it's not a big deal to go back. It just really gets delayed. So everyone's very hopeful this time that all the issues are addressed. This drug is a post-operative non-opioid pain reliever, and there's some other ones that are out there now. However, this one is different in its mechanism. It's one of a kind. Would also be the standard of care. We're in an opioid, pandemic as well as COVID epidemic. Yeah, it's probably epidemic. Yeah, that makes sense. But from
Crisis.
Yeah. So this would help a lot of people. When someone gets surgery, gets prescribed a bunch, oxycodone, Dilaudid, whatever, it's not a good thing. So doctors and health providers and hospitals and the whole healthcare system, they need this. The opioid crisis needs to come to an end, and this is one way to start. Some price targets on Heron, which, by the way, the ticker symbol is HRTX. The high price target is $70 plus. Right now it's at $18. I'm on the lower end. I think that if it does get approved in the next couple weeks, which I think the PDUFA date or the FDA date for approval is May 12th. So it's coming up in the next couple weeks here. Like I said, third time going into it. We're hoping that the company addressed all the issues. CEO seems pretty confident, so I'm confident. I've been a long-term investor in this company too, over 2 years. But I see it going to about $30, maybe mid-range, mid-30s on approval. But even then, I'd probably only sell a portion of my position and hold the rest long-term. It's a strong buyout candidate by Big Pharma, as well as they prove that they could sell the product. I believe the price will go up to the 70s or higher as well in the long term. But those are my 3 for this week. I'm not going to go into much more detail.
Okay, well, I don't want to take up too much of your time.
Okay, yeah.
But the last thing I was going to say is you said all those companies are up right now.
Yes.
And normally you want to buy when the company is down. You talked about a potential day that the market would be down later this week, correct? Could you elaborate on that some?
Yeah.
When the proper time to buy this week would be?
I mean, timing is everything. Like I said, with a really strong green day, we could see some more green tomorrow and even the next day. But I guarantee we have at least one red day this week. one thing that I do when I start positions, I don't want to go all in at once. Maybe I'll start my position slow. Like I'll buy like 100 shares of this or 100, a couple hundred shares. I'm not going to load my entire what I was looking to say I want to buy 1,000 shares. I'm not going to buy all 1,000 at that one time. I'm going to buy in pieces to try to get the best price I can. We haven't talked about too much of the technical analysis to kind of go in and kind of find the floor and support of the price, but we can talk about how you can, and on another one we could talk about how you can really go in and try to find the exact best entry. I'm not gonna. That's like more detail right now.
No, I hear you.
But yeah, typically, buying when something's up a bunch, you probably want to wait for a retracement or a decline to kind of get in a better price. Another thing with these biotech and pharmaceutical companies, when they make the FDA date public, so a lot of people, there's a website you can go on and look up the whole calendar and see, oh, this date, this drug's going to be approved. And 9 times out of 10, when it's approved, price goes up. So usually, sometimes there's a run up to that date. So that's what you need to watch with HRTX the next couple of weeks. I guarantee the price breaks 20 in the next couple of weeks and kind of settles there until we get some news. But getting in now wouldn't be a bad thing. My average is 17. It's at 18. But like I said, I've been there for 2 years. During the pandemic, March 2020, when we had the crash, it went down to $8. And I was down, I was down 60, 70%. I just held it. I kind of averaged down a little bit, bought a little bit more when it was down, and, it recovered. So, yeah.
Okay. Well, hey, thanks for spending time with us.
Absolutely. Sorry to talk too much, but
we appreciate you doing what you do. That was a lot of information for them. I'm sure that they will enjoy it.
Yeah.
And get a lot out of it.
Absolutely. I hope
look
so.
forward to seeing you on Friday.
Yeah, I will be here.
Market Matt.
All right.
All right. We'll be back.
See you guys.